Hey everyone, thanks for tuning in to what's happening in real estate this week. I've got Conrad Zerini here with RE/MAX Escarpment, RE/MAX Niagara, Brian Hogbin with Mission 35 Mortgages, and also myself. We're going to talk about what's happening in the condo market, and also people are forgetting that duplexes are a good way as a stepping stone. But anyway, the condo market, Conrad, now they've been taking a beating for developers right now because it's hard to sustain rental income to manage, with the cost of running a condo to versus what rent you can get. And I think Toronto's having a little bit of an issue with that. So a lot of guys are getting out, and a lot of guys aren't buying in to the condo market, and that's what's the driving force is the investors. So how are we gonna fix this to get the condos keep going up so that we have housing constantly building here? What are we gonna do about this?
We slash interest rates. No,
solved.
Done. It's done. It's done. Yeah. No, it's interesting. Yeah, and there's no question that people that bought in, let's say they bought in 19 or 20, they're still doing okay. They probably made 20% of their money because they're taking delivery. Like it usually takes 4 to 5 years before something. You actually take possession. Yeah, it's troublesome, and especially when you're in the occupancy period, people don't realize the average occupancy period you're paying just purely interest only, and some of these occupancy periods are like $5,000 on when they're taking over these condos. So yeah, it's been a bit of an issue, but you grin and bear it because you've made 20%. So going forward, what's going to happen? So there have been some projects that have come out, and I know there's going to be, everybody's waiting for September, like September. I hear so many projects going to be launched, but they're selling probably 50% of the velocity they used to. So 70% of a project would be sold in like a quarter, like in 3 months. Now, maybe you're probably under 50% being sold in 3 months. And it's price point. That's what's really driving it. Anything that's 700 to 800,000 is doing very, very well. And I would say the 905 and the 519 is doing well. There was a project in Paris just sold out in a weekend. They were 1,200 square feet, and they were selling around 600,000. They were stacked. People like that. They're going to be, that's price point, right? It's definitely a price point thing.
Yeah. So do you think in 4 years from now, 4 or 5 years from now, there are not going to be that many condos opening up, like finished, like that? Usually, like you said, it takes 4 years sometimes.
Yeah. Well, yeah.
So in 4 or 5 years from now, we're not going to see a lot of people taking possession of their units because it's going to take longer to sell these things. And if they sell at all, some of these developers, if they're new developers in the condo business, they may end up losing this. You know what I mean? You know how sometimes there's always a new player in the business, and if they don't know the market that well, yeah.
No, you're right. And because we've seen a lull, you're 100% right, Rob. We've seen a lull in sales, so we lost a complete and utter year of sales. Now, the other cool thing too is to understand is 416, like I was mentioning before, it's $1,536 a square foot in Toronto, brand new condo. And in the 905 area, it's probably around 11 and change, but the rents are only about 15% lower in the 905 than they are in the 416. So that's a very interesting gap. So people are being like I said, they're going in the 519s and 905s, and they're looking at condos and things like that because the rent's a little bit, it's higher. It's about 10% higher per square foot than it would be in Toronto, which helps bridge that gap.
No. And the other thing for investors today too is even though that they're in a negative cash flow position, because a lot of the ones that we see closing today, they might be $500 negative, $1,000 negative. We're doing more loans right now with alternative lenders where they'll actually take the appraised value instead of the purchase price. And because, like you said, they bought it 4 years ago, and it's not ideal with the lower interest rates, but they're still able to take out 80% of the as-is value, take out their equity, and put it over 35 years. And what we're seeing is they're taking out an extra $10,000 to $15,000 now to cover the shortfall for the next 12 months. So it's kind of like, and you know what, when you look at it on a return on investment, I get it's not ideal. No one wants to lose money every month. But a lot of them have no money into that property still. If you bought it 3-4 years ago, you're still sitting there going, this sucks, but I got all my capital out still. And I'm paying 7.5, but I'm still flowing through.
You know,
So
That's brilliant. Their
So-
cash on cash is
Yeah.
like through the roof then, right?
Yeah,
That
so
return on investment.
Okay.
That's
Yeah.
brilliant.
So here's one thing and maybe I don't understand it as well now, Conrad. When you take possession of a condo, you have to pay.
Mhm.
You have to pay them what, rent or something like that.
Well, yeah, it's a phantom mortgage, right? And it's usually it's 100% of the purchase price.
So,
it's based on that.
So let's say I'm a guy, I'm going to pay cash for it, and let's say the condo developer, like usually how long is it? 6 months you have to pay that?
Well, there's a project up in Northeast Burlington, in Alton Village that I think it's 3 years they've been paying the phantom mortgage. So it depends on how credible. Again, you got to really choose the right horse and the right builder, right? That they're really credible and they've got a good reputation.
So,
But yeah, 6, 8, 9, 10, 12 months. Yeah.
Like, why not just like, I know they want all title to be changed over in the same time. But I just think that's an unfair thing that has to be done. Now, you know this business better than I do when it comes to developers and condos and all that. But okay, I'm taking possession. If I'm paying cash, why should I have to pay rent? Why? Like, here's my money. I'm ready to pay you now. Now I got to pay that fee that before title's transferred.
Well, yeah. Because they can't give you clear title because the project hasn't been registered. So sometimes you look at a building, and let's say there's a lot of penthouse units.
Yeah.
Okay. So what happens is for them to register, they have to like put a toilet and a sink in those penthouse units, or they have to have substantial completion before they can register it all, and that kind of delays things. Depends on how many penthouse units they have that are not complete. Right. But so there's got to be a sink, there's there's a checklist.
Right. So they do that.
Yeah. They do that to kind of bring down the time frame. But you got to really look at the building, you got to look at the builder, the whole 9 yards, and how, again, is there deficiencies and can they register? All the amenities got to be perfect and all kinds of stuff before it can be registered.
It's too bad you couldn't just register each one as they go in. Like I said, for the cash buyer that's buying the condo, I think it must be frustrating for them that they have to pay this whatever fee to carry that for the builder, which is not really fair.
Well, let me go a step further. During that period, let's say you've upgraded your kitchen and appliances, whatever, and let's say there's a flood. There's no insurance that covers that upgrade during that period of time, right? Because you know what I'm saying?
Oh, boy.
So it's a very interesting, because the builder takes out his own insurance, but when you're in there, you could have upgraded some things. Okay, now you have content insurance, but you don't have like let's say you had this live edge island and the water damage. Like there's a gap there, and sometimes you got to really negotiate with the builder to help you out with that.
So there's a lot. Yeah. Oh my God! So no kidding. But you can actually rent out as soon as you take possession of it, but not only.
Yes.
But you don't have ownership of it yet, but you got possession of it. So
that's right.
Now, question.
All the more reason to have a good builder.
So either one of you,
exactly.
Right now, today, obviously the 416 is expensive, but in the 905 and the 519 area codes to buy condos, because I know you and I think, Brian, you're not a condo investor, or are you?
I've got condos, yeah.
Do you?
I've got condos. Yeah.
Now, would you buy one today? Would you buy 5 today if a development went up?
I'd have to look at it and see. Do you know what I mean? I'd have to look at it and see. Yeah, you know what? Because right now, I actually like the multifamily market a lot more right now.
Yeah.
I think the stuff, I think that is trading at a bit more of a discount right now. And I think there's a lot more opportunity there because I see that market being a little bit over leveraged, the one where it's like 10, 15, 20 unit buildings.
I want to get back to that multifamily thing, but Conrad, would you you're an investor? What would you like the big
absolutely.
The plazas and the
I like the big stuff too, but I've bought and sold condos, and I think I'm a big unicorn guy. So if it's waterfront, I like waterfront. I like price per square foot. I really do analysis. And again, this is where you talk to your realtor and I look at, okay, what's the months of supply in a certain area? What's the rental look like? What's the vacancy rate look like in a certain area? And then I make my decision. Like if it's a fast moving market, in certain areas, like downtown was pretty rapid, like 1 month supply. Downtown Burlington, for instance, I would, anything that came up in downtown Burlington, that came out like 6-7 months ago, I probably would have bought it without a question because of what's happening in the market, right? So it's very specific, and I like unicorns, right?
Okay.
And I would say too, just because I know we've talked about this before, I would say the entry level price point in a condo is always a good one. So if you're able to get in on the second floor and you got the 1 plus a den or the 1 bedroom, you got that unit, that one's always going to be a first-time home buyer or an investor who's going to buy it.
Yeah.
And that market is always like the first one to prop up. So I would go
under the penthouse floors, corners. If you get a small unit, 1+1 in a corner, that those are critical. So it's very strategic how you buy as well.
Yeah.
Okay.
Yeah. So one other thing, what happened recently, and I don't think you have this, the renovictions. Okay, quickly on this. Do you think from 30 years ago, right from when they started converting apartment buildings into condos, you know which one I'm talking about in Hamilton,
I know a lot
from the 80s and 90s, and now. Do you think they're going to come out with something that's going to be difficult to evict people to renovate these old apartment buildings? Do you think that's going to stop investors, landlords, and everything? Because you got one end where the landlord, you know what, he can't afford to renovate the building, so now it's time to unload. And then so now the next guy's got some cash to fix up, but he needs to evict the tenants to renovate the building, they're getting a lot of attention right now on these apartment buildings, and people are getting evicted. And meanwhile, investors or landlords or owners that are buying these buildings, they need to renovate these buildings. That's why every time you change hands, they get better. And if it doesn't happen, and if the government stops this, we're going to have some major slums going on in Hamilton or everywhere else.
Yeah.
What's
but
your
I think
thoughts?
the argument's going to be because there's some big units. I don't know if you followed it, but there's been a couple of big units. There's a building downtown. They were 1,800 square foot units. Okay, there was about 190, maybe just under 200 units. Right? They did cash for keys. They bought all the tenants out and handsomely. Like they did good. And then now they've created almost 600 units out of that. So 1,800 square feet, some of those,
right.
those units are big. Like sometimes you could take 2 900 or 2 1,000 square foot units and make 3. So if you're doing that, what I call loaves and fishes, I don't know if they can argue with you. You're creating more housing. I've tripled the amount of housing.
Right.
It's going to be a tough one. If it's one thing, you're just renovating it to end up raising the rent. That's another thing. But if you're increasing the amount of units, God bless you.
Oh,
well, they'll probably just end up taxing it, right? So they end up putting an additional tax on that, right? Then it's like it is doing something good. I agree with that. I think that is a good one.
Yeah, but so that is one indication. But what about unit for unit? Like they're just renovating. Do you think that is going to affect future investors on apartment buildings, buying apartment buildings? Like
I think it's going to make it more difficult. I think it's going to make it more difficult because you're going to have to play a longer game. If there's more approval process and there's more like red tape to go through, then you have to sit on that asset for longer and carry it, right? So it's going to eliminate the smaller guy, girl company getting into the bigger stuff.
Oh, for sure.
Right? Because they just won't have the reserves or the cash to be able to do it. So the other funds, REITs, or existing
institutional.
Well, what about what's the big Effort Trust, right? They own a lot of apartment buildings in Hamilton. Now they must have buildings that they could collect way more income on apartments. They got people that have been living there for 30 years in some of these apartments.
But they bought some of those 30 years ago. Right? So I think they're like the longer you're in the market, you could absorb those. It's just like if you had a tenant that you bought a house 10 years ago and you didn't raise the rent, it's all relative.
No,
right?
no, it is. But the value of the building is based on the income that comes in. It's almost a recession proof. It's a recession proof investment because I mean, like if your building's full and you're collecting rent, no matter what the market is, it's based on the income. You know what I mean? Like your net and everything, your cap rate. So if it works well, you're gonna
and when you have thousands of units, I hate to say it, but they look at that person will pass away at some point. Like they're looking 10, 20, 30, 40 years ahead.
Right.
They're not looking to sell like a company like Effort Trust. Like, you know how they built their business too? It was all on property management. Right, a lot of them they started on property management, and then they started to acquire a lot of those buildings as well.
Yeah, that's the way to do it.
They're an interesting example. It's the REITs that you got to look at and what they're doing, and they're looking at every little nook and cranny. They're looking at what I'm saying. They're taking 2 units. Let's say they're not side by side, but they say, look, we'll move you to this unit, and then we'll get these 2 units and make 3. They're shrinking lobbies. They're looking at the laundry. They're really kind of trying to squeeze it out. guys take it for trust. They bought these, like, look, when I started in real estate, you could buy a unit for like 30,000 a unit.
Yeah.
I remember when it went to 33,000 a unit, and I thought, oh my God, the world's coming to an end.
What?
Right? With that
10% increase? Are you kidding me?
10%. I know.
That's
So
what we'll
at
be
the end
saying
of
10 years from now, right?
Yeah.
Oh,
totally.
10 years from now, it'll be like 300,000 a unit. Oh my God, that was amazing.
Yeah.
Absolutely.
Crazy.
Absolutely. Well, guys, listen, thanks a lot. I appreciate it. And if you'd like to see more of this, follow us and share. Thanks a lot for listening, guys. And thanks, guys, for being on.